If you're more of an investor where you don't have a stop loss and you're buying and holding for the long run, you should never ever use margin. You should never ever use borrowed money because you could blow your account and end up bankrupt. Okay, so again, leverage is very powerful, but it has to be used responsibly with very strict risk management criteria, which means if the trade doesn't go the way which you anticipate, you have to quickly cut your losses. You have to cut your losses so when you have losing trades, you lose very little. But when you have a winning trade, you leverage 2 times to 10 times of your returns. And that's the key to achieving high returns in your trading portfolio. Now, if you're doing short-term trading, then leverage is essential to growing your account fast. Why? Because when you do short-term trading, you're in and out of the market within a few days, or in the case of intraday trading, within a few hours. So in a few hours and a few days, the price can't move that much. So in order to have a good return on your capital, you have to leverage the price increase. So going back to the example of FBC, and if you were to enter the trade at, for example, $35 right here, and you're doing a quick swing trade, which is a couple of days, right? So you're in there at 35 bucks, 1, 2, 3, 4, 5, 6 days, you exit with $38. So in 6 days, the price went up by $2.50, which represents a 7% increase in the share price. So again, by using leverage, margin account of CFDs, you are magnifying your capital by 14% to even up to 70%. That's a 2 to 10 times leverage. So again, let me just say that leverage must only be used with strict risk management rules, which means placing a stop loss right below your entry, so that if it's a losing trade, you have to cut your losses and get out really fast, and the winning trades, when they appear, will more than make up for the small losses. One of the reasons why many people go bankrupt is because they use leverage when they buy and hold the investment with no stop loss, and that's how you can destroy your account. So only use leverage in short-term trading and not long-term investing. It's really very important. Okay. So one of the things to understand as a successful trader or investor is that there's no such thing as a good or bad market, and there's no such thing as a good or bad stock. Many people ask me, Adam, this year would it be a good stock market? And I ask, I say, what do you mean by a good stock market, right? If the price of the market goes up this year, is it good? It's good if you go long. If you don't go long, it's no good, right? If the stock market crashes this year, is that good? Well, it's good if you go short. If you did not go short,